My name's Callan Thompson, and I'm facilitating this webinar for New South Wales DPI and New South Wales farmers. So this is our Rebuilding Farm Profitability series of webinars and workshops. Just for housekeeping, if everyone could keep their mics off, the microphones off. And if you'd like to, if you've got the bandwidth, put your cameras on. There's nothing worse than presenting to some black screens, so it's good. It'll let our presenters know that you're awake and listening. The buttons to do that are on the bottom left-hand side of your screen. If you have any technical issues tonight, at the middle of the bottom of the screen, there's a chat button. So if you just like to type your question in there, and Maria will try and help you out. So what I'll do is ask Daniel Beer from New South Wales Farmers to do a quick welcome to everybody.
Thanks, Callan, and welcome everyone to tonight's webinar. It's great to see. I noticed a few names popping in. That there's a fairly good spread around the state already, with some attendees from Dubbo and Northern Slopes popping up in their within their profiles. So fantastic to see. In kicking off, I would like to acknowledge the country, and with that, New South Wales Farmers acknowledges the traditional custodians of the land, which in my case is the Wiradjuri people, and pay respect to elders past, present and future, and extends respect to all First Nations people in other regions which our attendees may be tuned in from this evening. We recognise and respect their cultural heritage, beliefs and continuing connection with the land and rivers. We also recognise the resilience, strength and pride in the Wiradjuri and First Nations communities. The FBRP project, obviously it's a collaboration between New South Wales DPI and New South Wales Farmers, and we're being supported by the Farm Business Resilience Program, and it's funded through the Australian Government's Future Drought Fund. Obviously, these events are, a really good opportunity, and I'm glad to see so many have joined tonight, but hoping, obviously, with future events, this being the kickoff, that we can share some of the value that's learned tonight and build that attendance over the journey of the events. So we hope you find everything in today's or tonight's presentation useful and can implement some things on your farms, because overall that's really what we want to achieve today. I would like to briefly introduce our speakers. First of all, we've got Carmen Quaid. So Carmen is the founder of AgriFocused and has worked as a university lecturer in accounting and agribusiness, and enjoys working with people to improve their business skills. She also has extensive experience in local government, both in economic community development as well as corporate governance. One thing I really do like about Carmen is she's a farm card partner with New South Wales Farmers as well. So a little bit of a comment there that New South Wales Farmers does have a strategic relationship with Carmen, and if you are a member of New South Wales Farmers, make sure you give us a shout, and we'll put you in touch with Carmen for one of our great offers. My other introduction is to Ben Dalbroy. So I'm very lucky in that I know Ben and have worked with Ben for quite a few years. Ben's actively involved as the Secretary-Treasurer of our New South Wales Farmers Griffith branch, but obviously is here to talk about farm business and farm business resilience and decision-making tonight. So really looking forward to hearing from Ben in that capacity and what he's doing on his farm with his family to make it profitable and successful. So with that, I will hand back to Callan. I hope you have a lovely night tonight, and make sure you use the chat and interact with us tonight. Have a great night. Thank you.
Thanks, Dan. And so we're going to try and make this as interactive as possible. So hopefully you've used Slido before. For those who haven't, if you want to grab your telephone out, you can scan the QR code. Unfortunately, we're all pretty good at that now. Or you can go to slido.com and then put in hashtag New South Wales Farmers. So I'll just give you a minute to do that. And so I'm going to ask a question first, and that's, what's your closest town? So if you've got your Slido open, if you can just type in your closest town. So we've got someone from Albury, Canamble, which isn't too far from home, Binaway, which is much closer to where I am. I'm from Coonabarabran, Toowoomba, Canowindra, Delungra. We've got about 10, 11 Kyogle. So we've got a really good spread across the state. So I'll go to our next question. So could you rate your financial knowledge? So I guess if you're 1 star, means you're probably not using financial tools to make decisions. And if you're 5 star, you're potentially a qualified accountant. So we've got a couple of 1 stars, quite a few 3 stars, which is really good. We've got a couple of accountants on here, which means Carmen's going to have to make sure she does a good job of her talk. But yeah, the majority are around a 3. That's great. The next question is, what do you want to get out of today? So what do you plan? What did you come here expecting to learn about, to find out about? Give you a bit of extra time. Everyone's probably madly typing on their phone. So someone wants to increase financial knowledge, new insights, budgets, financial tips, learn to make better decisions. I don't think I've given you enough letters to fill these in correctly, but we understand what you're saying. Buy a farm, tax planning, increase skills for profits, listen in, tax optimization. So I think we're going to be able to cover a lot of these. The buying a farm component of it, I think, yeah, you might pick up some things from Ben in that space, and yeah, we'll see how we go with that one. But most of these should be able to cover. Very good. So as we listen to tonight's speakers, it's worth remembering that they're not here to tell you how you should manage your farm or give you specific financial advice. What they're going to talk about is tools that they use and tools that their clients use to make decisions on their farms. So it's really important that we think about the practices we're about to hear about and how they might fit into our own farm business. And remember that it may not be an option for everyone, but think about the principles behind that practice and how that might relate to you. So I'll stop sharing my screen. And I'll hand it over to Carmen.
Thanks, Cullen, and thanks for the lovely introduction as well. It's great to be here. What what wasn't explained by Daniel about the this farm partnership thing with New South Wales farmers is not only do they lobby government, they pick on small businesses and lobby them and then make them pay for the honour of giving all of the members of New South Wales farmers a discount. So I'd suggest you get out there and make the most of it. They do a really good job, and it's good to be able to support them. So making financial decisions that drive farm profitability. Why are we here? So we're going to talk about assessing farm business decisions, understanding business constraints and how we can make them work for us or how we can overcome them, and look at some tools for business decision making. So basically, this is a disclaimer. Callan touched on this a little bit when he was chatting. The essence of it is you're potentially running a multi-million-dollar business. Don't make your decisions based on a free webinar. Go and get some professional advice from somebody that is really in tune with your situation and what you're trying to achieve. That being said, you'll get a lot of great information, make some notes. It's all about knowing what questions to ask and knowing what additional research you have to do. Now, every single farm business is different. So the decisions that we make for our individual businesses are also going to be different. And the differences are quite obvious: climatic conditions, our business objectives, what we want out of life in general, industries, and all of those sorts of things. But when we think about good business decisions, we need to talk about good business decisions versus the right business decision. And this little canola crop in the background here is a bit of a prompt to tell you a little bit of a story about my marketing good decision last year and how good decisions are different from the right decision. Now, last year we were growing this monster crop of canola and it looked fantastic, and it's certainly the best canola crop we'd grown in a long time. And it certainly gave us a lot of confidence into forward selling some of the canola. We'd been burnt with frost before, and we were very cautious about how much we decided to lock in, but I got a bit excited when I saw the price get to $750 a tonne and locked in what we would normally lock in at about that time. Now, it was a good business decision at $750 a tonne. It was 50% higher than what we budget on, which is about $500 a tonne. Was it necessarily the right business decision? Now, when you look at what the price has got to later in the year, you know, $950 a tonne potentially that I could have sold it for a little bit less than that at harvest time, it certainly didn't feel like the right decision. But knowing that at the time, with the information available, with our sort of guidelines that we sort of tried to stick to internally in terms of marketing decisions, I had made a good decision. And therefore, it gives you a little bit of padding when you're beating yourself up that, you know, realistically, it wasn't necessarily a bad decision. In retrospect, perhaps not the right one, but definitely a good decision. So that's what we're about today. Nobody can make perfect decisions all the time. Certainly in agriculture, there are so many variables that we have to deal with. It is impossible to make the correct or the right decision every time. What we're aiming for is just a well-researched, solid decision where we've thought everything through as best as we can at the time. And as we move through things, we can look back and say, well, you know, based on the information we had, that was the right way to go. The other thing about ag and the back of Wee Sally, as you can see here, is often there are many ways to get to the same destination. We can head off in different ways. We can make decisions on farm in terms of our long-term profitability, in terms of our net assets, in terms of the outcomes for our livestock or our crops. We can end up in pretty much the same spot. So we don't have to get, again, too fixated on making the right decision every time. Sometimes it's just about making a decision that just keeps us moving forward. One thing I want you to think about, and if you've got a pen and paper, something we can work through together in a little while, is about the constraints facing your business. Now, yes, we have all of these variables that we're trying to work through. We also have some constraints on the decisions that we can make, and we have some constraints on our business. And we can divide these into four things: our land, like basically our resources, our land, our labour that we have available, our capital, and our enterprise. So land, do we have sufficient scale and productive capacity to meet both profitability and sustainability outcomes? One of the prompts here is fodder the same as land? And I'd suggest in lots of ways, fodder is actually the same as land. It's where the fodder comes from, essentially where it's stored to a degree. So looking at our fodder resources as our land resource and our water resources in with land, is that a constraint for our business? Labour, do we have sufficient labour capacity and quantity when needed? Do we have power to co-opt out or contract? Capital, do we have working capital or cash to keep things running? Do we have net assets and equity that are sufficient to withstand difficult times? Do we have sufficient equipment, machinery and livestock? They're also capital. And enterprise, that's the entrepreneurial and managerial skill that it takes to run a business and bring everything together. It's made up of experience, it's made up of risk management, it's made up of drive. And at various times, we've got that ability in varying degrees. Now, these are the resources that we need to run a farming business. When we're looking at making investment decisions within our business, we need to have a look at whether we're actually making a decision that's overcoming a constraint or actually contributing perhaps to some of the problems that we're facing. So, Callan, we were talking about this earlier. With land, what's a way of overcoming some of the constraints that you might have if you don't have productive land or you have land that's perhaps too small for the scale of business that you're trying to run?
Yeah, so one thing we spoke about, Carmen, was actually buying more land.
Yep, which is great, but then can potentially put pressure on our labour, our capital and our enterprise. So that, you know, that can certainly be a challenge. What about decisions that affect our labour?
I guess the skills set of your labour and the people locally that you're able to employ.
Yep. Sometimes when we're making decisions about machinery, we're making them essentially about labour. So either to overcome a labour shortage or inadvertently, sometimes we actually make the labour shortage worse. So about 5 or 6 years ago, we bought our first sort of large semi-trailer truck, and I was totally against it at the time because essentially we were contributing to the labour shortages within our business. Instead of outsourcing a truck, buying contract, you know, like contract carting of grain, we were sort of doing it ourselves and therefore had to put somebody in the seat of that truck. But when the time came 12 months later to buy a second trailer for it, I was right behind it because essentially it then made our labour far more efficient because it was more tonnes per labour hour that we were using. So there's sort of some things there that you've really got to be aware of, particularly when we're replacing contracted machinery or contracted labour with doing things ourselves. So what about the capital? How do we sort of get more capital into our business, or how do we contribute to overcome a constraint with capital?
I guess you could look at bringing in an investor.
Yeah. And even taking in more debt in some ways. Paying off debt frees you up to draw down on capital later. So it's just an equation there with capital. It's just about money in potentially and money out. But looking outside the square, taking on an investor, getting somebody else to work with you can certainly address that capital constraint as well. Enterprise is a really funny one. It's we can hire in somebody like Andrew at the bottom to give us some advice about our business. We can perhaps spend a little bit less time working in the business and a little bit of more time working on the business and doing things like this, which expand our decision-making capability and things like that. So in every business decision we make, it's really good to run through these things for the major ones and say, well, actually, am I making life harder for myself, or am I choosing to make things easier for myself and overcome some of the constraints that are facing our business? Now, I'd like everybody here just to pop in the chat. Was it the chat, Callan, that we had them popping it in, or the
we can use
Slido?
chat, or I've just started a Slido poll, but we can use chat as well if people aren't on Slido.
Slido's great. What are your not top 3 business constraints, objectives? So what are we trying to achieve with our business? If we were trying to achieve 3 things, what are we trying to get out of our business? What do we want?
So Carmen, I've got one up so far, and it's expand cattle herd.
Yep.
Profit and sustainability.
Great.
Efficacy of labour. Profit
Fantastic.
and lifestyle. Profitability. Improve soil.
Fantastic.
Enjoyable. I like that one.
Good.
Sustainably profitable.
Fantastic.
So I can see it's showing Slido showing a word cloud for me, and profitable is one of the key answers.
Yeah, and lots of those other ones like increased stocking numbers, you know, they can be linked back to profitability too. So, and sustainability is intrinsically linked, I think, to profitability, because it's basically just wanting to be profitable on the long term. So luckily I preempted this, Callan, because I thought most of us are really here for these profitability related things. So the decisions that we want to make are decisions that increase our profitability, because profitability is linked to all of those other things like lifestyle. Long term, we can't have a good lifestyle unless our businesses are somewhat profitable. Long term, it's really hard to be sustainable and in the game for a long time if we're not also running a profitable business. So I just wanted to recap on a few of the things that really govern profitability in different enterprise types. Now, all of the research, MLA, GRDC, all of the research always comes back saying, unfortunately, much the same sort of stuff. And as much as we'd like this great groundbreaking thing that's going to change the profitability of our farming businesses long term, it's really the basic stuff. So in livestock enterprises, we're looking at fodder or stocking rates. So basically the ability to feed animals cheaply and feed them well. And withstand those difficult seasonal conditions or manage those difficult seasonal conditions. We're talking about fertility and we're talking about productivity. So kilos gained per day or kilos of wool cut per year, depending on what your enterprise type is. And I'm just presuming most people are mixed farming here. Profitability in grain growing enterprises, it's even more boring, doing the right things at the right time. The other two that are really interesting to know is access to machinery fit for purpose and scale. So that swings both ways. So it's about saying we don't need to be overcapitalized in terms of machinery and spending more than we actually need to. And that can be a difficult challenge in particularly mixed cropping enterprises where we've got a split of hectares between two different businesses. It's also about not being too far the other way. So having essentially small gear that takes too long to do the job, and then we're not getting crops in optimal sowing windows, we're not getting crops off quickly, and they're therefore vulnerable to damage in terms of loss of yield, price, quality, etc. Also important to note that the best marketers, and this gives me faith about my canola marketing in years to come, the best marketers will only achieve $20 to $30 more per tonne, and then not every year. So it's really about those basics, doing the right things at the right time, getting the job done quickly and efficiently. So what are the decisions and how do we make the decisions that lead us to that? So let's have a chat about some tools for decision making and about how tax impacts on our on-farm investment. Now, I'm going to send you out via Callan a bit of a, this slide particularly, and a bit of a template you can work through yourselves, because it's really important to get some of this top stuff sorted out, what your values are, your personal and business goals, and what you want to achieve over 10 years. And if we can get that 10-year farming plan particularly nailed down, it makes all of the decisions that flow on from that a lot easier. So the basics of tax and business profitability. Now, a lot of you, from the look of things in our earlier poll, will be all on top of this. We have gross farm income in, we have our fixed operating costs out, we take our non-cash costs out, such as depreciation. We take our finance costs out, and then we have our earnings before tax, and that's the figure on which our tax is payable. Now, out of that amount, we've got to pay tax, personal drawings, personal super. There's some funny tax rules about that, which I won't go into. Pay off debt, if there's any off-farm investment on the agenda, holidays, lifestyle, all of that sort of thing have got to come out of the cash left over. That is why businesses can quite often find themselves in the position where there is no cash in the business and it feels like the business is making no money, yet there is still tax to pay. And that was one of I quizzed a few accountants before this webinar just to chat to them about some of the common misconceptions and misunderstandings about tax, and I'll run through those. But if I get one point across today, it's that accountants are magical creatures. They have so many little tricks up their sleeve in terms of managing tax that the onus and the responsibility on us as business owners to understand it, I think, is really quite low. What is important to realise that from a tax perspective, we are essentially a muggle. And for those of you unfamiliar with the Harry Potter series, the world is divided into magicians, magical people, and the rest of normal humanity called muggles, who have absolutely no magical instinct whatsoever, even though they might try to apply the same sorts of spells and say the same sorts of things, nothing actually happens. The rest of us are essentially muggles. I, from a tax perspective, are a muggle as well. We get all of our tax information from accountants who are doing this all the time and staying up to date with it. There are quite a few common tax misunderstandings that are still out there that people sort of tend to hold on to. This is the first one, and I think probably the most important one to overcome, and that's thinking that tax is a problem. Tax is a sign that your business is making a profit, which is a good thing. And it's also the price we pay to live in a developed country. The irony also is that tax has paid for this webinar that we're enjoying today. Long term, if you don't pay tax, you either go to jail or you go broke. And I think that's a really important one to realise as well. Coming off some difficult years, and they weren't all that far behind us, as much as we don't like to think about them, some businesses might be in the situation where they're thinking that they've potentially got a larger tax liability than they actually have got. So they've got carried forward losses, there's income splitting, farm management deposits and tax averaging. It might mean that tax payable is actually low. The accountants I spoke to were talking about the farmers that are actually sitting on the header, they're seeing all the tons roll in, they're seeing all the grass growing, great things are happening in the sale yards. They're thinking that potentially there's a big tax debt there. There may not be. And that's why it's always good to go to the magicians and find out really where you're up to. The other misunderstanding, deductibility of finance payments. So that's thinking the whole amount of machinery finance is deductible. It's only the interest. The timing is another funny one. Spending money today to save tax, and machinery dealers love this, buy by 30 June to get your tax back. And that's sort of linked to this one. Down here in the corner with the instant tax write-off, it's a grant. It's not a grant, you don't get your money back. You actually just save paying some tax later on down the track and only at your marginal rate of tax. So potentially for some people that are not making as much profit, the money that they get back will be less. Lack of planning about succession, downsizing or exit, and tax. If you're looking at just finishing up in your farming business and not passing it on to anyone else, you still want to be planning this out about 5 years in advance, longer if you're looking at intergenerational transfers. The capital gains tax is at the same marginal rate as taxable income. It's no different. So planning that out over a series of years is really, really important. Make sure you are well aware of the deductibility of personal expenses. Some things might look like and might be paid out of a farm bank account, but from a tax perspective, they're actually really personal use, personal expenses, and will actually get deducted from those business type expenses we were looking at the top and end up coming in the bottom after the tax has been deducted. So has anyone got anything that they'd like to add that? Something that they've learned about taxation or like to share? Because we had a few people up in the 5s there that might have something that they wanted to throw in. So I'm just really quickly going to run through how the instant asset write-off works. What it is doing, and we're hearing a lot about this, basically you can write off all of this capital. We can buy $350,000 worth of machinery. If we're looking at making a $350,000 profit in our business, we then don't make any profit and therefore don't pay any tax. And that looks fantastic. The reality is that even under the small business pool with the old rules, over a period of time, you would have been you are actually able to fully depreciate the same piece of equipment. It just spreads out the deduction over a longer period of time, and the tax paid over a similar time is a similar amount of money. So you're actually not really gaining anything bar the cash back in your pocket a little bit earlier. One thing that I was asked to strongly emphasize was that we've got this written down value here. So this is the book value of the asset. If we were in 2028 to sell this for $135,000, we would essentially be making $100,000 profit on this item of machinery, which would have been added to our tax. Now over here, where the written down value is essentially zero, if we sell it for $135,000, we're paying the tax on the $135,000, or we're actually adding that to our income. So it's just something to be aware of for those people that are using funds at the moment to buy depreciating assets, which are then on-sold. Not so relevant for things like upgrades on farm, new silos, infrastructure, etc., that won't be sold. So one of the decision-making skills that we need is how to estimate costs. And often people do this in their head, or they do this just very quickly without thinking too much about the longer term costs associated with things. The other thing is often, I think as farmers, we think a little bit too small. Sometimes it's really important to think big. So instead of thinking about little on-farm projects, taking that really big picture view of what we want to achieve long-term, if we have to chunk it into different stages, we have to chunk it into stages. But rather than actually just thinking too small to start with, it's really good to have a really big view, and also being honest with ourselves about that. So what to include in our cost estimate? We need to include our short-term costs. So if this is an infrastructure project or a piece of machinery, just those first off things, then any ongoing costs or savings associated with it. We need to look at the total cost of ownership for machinery. So are we incurring additional servicing costs? Do we need to build additional sheds? Do we need bigger augers for new silos? There's the things that really need to be considered. What are the advantages and disadvantages in wet, dry or normal seasons? Do we have any labour cost? Or are we saving labour? We have to have a think about the finance component. Now, the gradual increase in interest rates, I think, is like they're going to continue to go up. It means that things like the Rural Assistance Authority loans and the RIC loans are now back on the table as being an economical option. When you were paying a variable rate of 2.2%, it was difficult to actually get your head around signing up for a 2.9% RAA loan or the 2.99% RIC loans. Now you might be thinking that they're looking a little bit more attractive. So sort of start investigating those again for some of that on-farm infrastructure upgrade work, and anything that can be considered drought proofing will often fit in with those Rural Assistance Authority guidelines. Again, ask your accountant to estimate the tax implications because you are a muggle. All it takes is the quick little email and they'll love it. You might want to prepare something like this, total project budget. This again, not speaking from experience, this never happens on our place. You might think that the yards are going to cost $35,000. And then you get a bit excited because you see them there, and then you want to do, concrete the race, and then you're doing this and then you're doing that. And before you know it, the project blows out quite considerably. So this is what I mean about thinking big, thinking about what you want things to look like at the end, and then laying out the entire project cost. You can then look at your costings in terms of finance, term loans with a bank versus a term loan with the RAA. So these are really useful when communicating with lenders and accountants. Don't get bogged down in the detail. Just throw some big round numbers at things. Don't bother getting quotes for every little thing. You know, just have a chat to someone and get a bit of a rough indication of what the costs might be. Great also to do a year in, year out budget. And this is when you can factor in those increased savings or increased costs from any decisions that you're making. Now, quite often you don't have to play around too much with all of these. It's just about adding in another line for the new project or adding in another line for the new payments, etc., and just seeing how year in, year out, this just impacts on your bottom line. Partial budgeting is also a great tool, and this is great when we're looking at like an either or situation, or looking at, and you should be, I think, with any investment decisions, looking at, well, let's make this a choice between paying off some debt, investing off farm, or, you know, potentially contract harvesting, or alternatively buying our own header. So in this little scenario, we've looked at if we were to buy a header, we'd save. So basically we'd save some money on the contracting costs. We'd also hope to contract for some neighbours and make some money there. But we're then paying some interest. We've got depreciation. And here we're looking really at that loss of value depreciation rather than our tax depreciation, because we're getting our accountant to work that out for us. But basically, if we're buying a header that's costing $500,000, it's going to be worth less every single year we use it. And that's going to be a decrease in our net worth. And if we're coming from a management perspective and not a tax perspective, which we are, we need to really be focused on those sorts of things. Repairs and maintenance, labour, and overhead allocation. So it's basically saying in this situation, costs us $97,000 over and above what we would pay for a contractor to do that. We can, though, also calculate things like timeliness. So over the life of the header, could we expect to save 5% of our yield at $250 a tonne by having the header in the shed ready to go when it needs to go? Yes, we could. So we can develop a spreadsheet like this, which allows us then to expand the hectares and look at that decision based on something else. I'll just hand my daughter over the babysitter. Off you go. And she's off. So you can see then when we increase the area, it actually decreases that cost. We've gone from 97,000. Now it's only realistically costing us $60,000 more than contracting. However, the potential savings by the timeliness factor of actually having the header there ready to go, realistically, you can say, you know, $90,000. And I think putting a number on these risk factors is really, really important. And it's about saying what's the likelihood of something going wrong over this period of time, and how much could we save or how much could we lose, and not being too dramatic about it, not saying, oh, look, we'll use the whole, you know, lose the whole crop, just putting some, you know, numbers on it that say, okay, well, fair enough, that'd be reasonable and realistic. So some decision-making tools. What can we use? We can use break-even analysis. It's a little bit simplistic. It's really common. I'd sort of stay away from it for most things that are worth over probably $10,000. It's quite commonly used, but I think it's pretty irrelevant in ag due to the complexity of most situations. But if you've got something little, like, you know, you're looking at starting to scan your own ewes instead of using a contractor, and the cost of the scanner is so many dollars, and that saves you so much every scanning day every year, you could say, oh, well, look, we're going to break even on that in 2 years. It's worth the time. That's about the sort of scale of sort of project you'd want to be thinking about that on. Anything sort of more complex than that, you're really going to have to look at something else and take in a few more things into your decision-making framework. Working through this sort of process is great, especially if you're doing it with some sort of team. And the team might be you and your spouse, or you and a larger family business, looking at going through the process, because quite often we get to here, or start here, looking at the problem, and then we go to choosing the best alternative. rather than actually trying to work out what the issue is behind it and really what situation the business is in. We go straight from number 2 to number 7 and then quickly to there. So skipping out that alternative of actually researching things, diagnosing things and evaluating them. Now, great in low stakes situations when things are more complex, when the situation is dealing with lower levels of profitability than we want, using a framework like this can actually lead to some better decision making. The other little example we can do is looking at weighing options up against your business objectives. So this is an example from a GRDC farm decision making workbook. And in this situation, they've developed a little table and they've actually allocated a score of 10 against their main business objectives. Now, a lot of these things, rather than allocating a score of 10, I would be looking at putting on costings beside them. So, okay, how much is this going to cost? How much is the new tractor going to save us? You know, can we put a dollar value on the farm productivity and the future income streams and the capital appreciation? So laying things out in a table like that can be really, really good. So calculating your return on investment is also really, really useful, and it's simple and it's easy to calculate. So it's looking at the returns over the cost of the investment as a percentage. So this is a table that comes out of John Francis from Agrista, one of the papers that he's got available on his website on the returns from liming pastures. So they looked at basically all of the factors associated with increase in grazing ability, increased stocking rate, etc., and for that, they're basically getting a 19% return on the investment. So it's easy to calculate, it's easy to compare projects of different scale, and it's also good to look at your cost of capital as a comparison figure. So when this earlier paper, when the issue was examined in 2007, you got a return on investment of about 7%. Now, when interest rates at that time were possibly around about that mark, it probably didn't look like a particularly good return on investment. Now with lower interest rates, higher livestock costs, so potentially higher returns then from the higher grazing ability, also higher land values and the scarcity issue there, we're getting a 19% return. So it's certainly very different. So it's really good to revisit return on investment figures when particular factors change. So the big one in cropping at the moment is the return on investment from urea, and we're going to have to sit back and do some really difficult sums a little bit later in the year because we have an addiction to this white stuff and we love really good yields. But potentially this year, we're not going to get the same return on investment from urea that we have got in previous times. So always good to do your sums. But remember, the most profitable decisions might not be the best decisions for you at this time. And that's also the difficulties, I think, in a business situation where you are faced with limited capital. You can be something out there. There can be options that actually would make you more money, but there's no access to the finance to do that. And that can be, you know, a really, really challenging part of running your own business. The other thing I really like to do, and this one is great when decisions get complex, is actually lay out a decision tree. And when you're talking to somebody and they're getting all tangled up in their own thoughts, sometimes laying things like this out is really, really good. We're looking at grain storage. Do we buy a bagger or a silo? If we buy a bagger, do we go secondhand or new? I had a quick look on secondhand, just estimate these prices, not many available, might be a little bit difficult, might have to write a line through that. New ones might be hard to get as well. But we can then look at the total cash impact, whether it's ongoing or in the short term. We could look at our silo options, whether we get a small one or a large one, and look at that first year total cash impact and that ongoing costs from there. But it actually allows us to actually eliminate some options, to weigh out them, compare them, etc. We can get super excited with our decision trees and start building in some probability. So looking at buying or selling ewes, you know, this is the most common scenario. We sell them, the price will hold pretty much within the next few weeks and we get 45,000. You know, what's the best we can hope for? We keep them, it's a good season, so we don't have to spend much on them, and the price increases. You know, what's the likelihood of that actually happening? And the best case scenario, $75,000. So we can use that to sort of help weigh out some of these more complex decisions. Investing off farm. This can be an option for some people. And why some people some of the time? I think it really comes back to return on investment. And this point 3, you've got to know your return on investment, because dollars might be better off kept in the farming business for a better return. So if you're getting 17%, 20% internally, and you're looking investing it off farm for potentially sub 10%, you might be better off reinvesting within your own farming business. But it can be better than expansion if expansion means buying more work and you acknowledge that your limitations in terms of your labour and your enterprise and potentially your capital are such that expansion isn't really on the table at the moment. Farm management deposits, superannuation can both be effective on farm investments, and talk to your accountants about these. And it doesn't have to be super fancy self-managed super funds. You can actually just invest in your own industry type super fund. Investing off farm might be a part of succession planning, but do get professional advice. You do hear people say, oh, look, you know, their succession plan failed because they actually didn't invest off farm. The reality is that investing off farm and saying it's for a certain person or whatever else is only just a psychological quarantining of assets. So if you're just trying to set aside something for a particular person or a particular purpose, just ask yourself, is this the best way? Is this going to give me the best return on assets? Now, certainly there's a lot to be said for diversity in your investment portfolio, but for smaller businesses that are holding a lot of debt, that have opportunities to make money on farm, don't feel like you're doing the wrong thing if you're choosing to invest within your business rather than seeking off farm investment. It might not be on the table for you. Consider liquidity when you're looking at off-farm investment. Can you sell easily if you need funds? So some things lend themselves more to this, like shares or cash, for example, compared to real estate. And we need to consider emotional liquidity. Now, this is something I just made up. But are you possibly more tied to a real estate asset? Now, you never really drive past shares that you sold before or cash that you took out of one bank account and put back in the farm to see how the trees are growing, look up to see what it's worth now. So just have a think about how you relate to different types of asset classes. Now, there's certainly quite a lot of blokes around. They're actually have emotional issues with machinery as well and find that very difficult to sell. So just have a think about your emotional relationship with the assets that you've got and how likely you are to sell them, and use that to govern your investment decisions as well. Because if we're trying to make businesses that are set up for hard times, sometimes we need to bring this money back in. So just a couple of slides to finish up. One thing I wanted to touch on as well is making money work for farm profitability and happy farm families. This is really important. We need to have common goals. We need to have appropriate alignment between family and farm priorities. So this isn't the situation where everything is invested to the farm and that family needs are somewhat neglected. We've got a certain limited time in a family's life cycle where basically, you know, you need a really good roof over your head. You need to be with your children. You need to have holidays. There might be educational expenses to consider. You get one shot at all of those things. You potentially have the rest of your life to build the world's best farming business. So making sure that those alignments are appropriate. The ability to change things when things change. And that's a really important part about getting through difficult times. Having shared values, and everyone having a good understanding of agricultural production systems and profit drivers, and even things like those return on investments. That's why doing the sums is really, really important. Even if there's only 1 or 2 or 3 of you in your own business, doing the sums, laying them on the table and saying, this is why we're making this decision, and this is how much it's going to contribute to our shared longer term goals. And this is why we're sinking money into this and not that, is a really good way to keep happy farm families. So take home messages, calculate the return on investment, think about the implications of investments in wet, dry and normal seasons. So not putting too much pressure on your capital if you don't have it, not putting too much pressure on labour if you don't have it. Leave the tax up to the experts and use the numbers to make some smart decisions. Thank you. We'll send out a follow-up email, as I said. We've got some educational opportunities there through our courses. They're the ones that Daniel was talking about with the discount that's attracted for the New South Wales Farmers members. And at any time, if you want to send me an email, I'm more than happy to chat with you. And I'll stop my shared screen. Any questions?
Thanks for that, Carmen. I like the idea of that emotional liquidity. I think that might be why I've had 3 utes in my life and I still own 2 of them. Daniel might just have to leave us. I think he's got a small child that needs some attention, and we've all been there. So thanks, Dan, for your time tonight. Carmen, the first question I have is, where would people find the tools you're speaking about? So maybe Excel templates that might help them out if they don't have those available to them right now?
Yeah, there's some really great ones available for free through, and I can send the link out. Like, there's some certainly I charge for, but there's some that you can get for free. Some really good ones through the Queensland Department of Ag, and I can send you a link out to those. And there's some I will send you a link out to some free resources that we did for the LLS last year. We can make a couple of those available, I think, Callan, for people to work through some of those sort of partial budgeting type tools that might be really useful for people. I think they're really easy to do. It's just about thinking about logically, thinking about things as choices and factoring in all of those decisions. So you don't have to really get caught up with doing things exactly the same way as somebody else. Certainly a calculator, a pen and the back of an envelope can really do, get you really started on that analysis.
Thank you. I did have some other questions. Mary, did you want to unmute yourself and ask your question?
Sure. Hi, Carmen. Look, I really love the idea of your 10-year farming business strategy approach. I think that longer term view is really important. I guess the question I've got is, what are the tips that you've got for getting and keeping the farm family buy-in into those longer term strategies as things change over time? Yeah,
I think it's about just continuing to talk about it and just continuing to revisit it. So the 10-year thing is like, it's also good to think about it as a rolling 10-year. I like 10 years because you sort of you can count on, 2 hopefully good years, 2 fairly rough years and 6 average years. And that's how it works seasonally in our area. In other areas that are perhaps slightly less marginal, you might be able to count on a few more good years, but I like it that way. I think it's about documenting it, writing it down and saying, look, this is what we're working towards. We're working towards this sort of expansion or this sort of succession plan or this sort of upgrade to our lifestyle or these sort of other lifestyle goals ticked off. And yeah, don't be afraid to write them down. I listened to this podcast the other day and it was really interesting. And they were saying people don't like talking about their goals because it comes back to childhood. And if you told someone you wish it wouldn't come true. And I thought, I'm still pondering over whether that's actually accurate or not and how much is tied up in that. But I think we have a certain level of embarrassment about talking about what we want to achieve. I don't think that level of embarrassment should extend to our own immediate family and our business partners. Fair enough, you might not be wanting to type it all onto a web chat thing about what you're trying to get and how you want to have 30,000 acres of good cropping land in the irrigation districts or something. But, like within our own farm business, if we want people to get behind us and support us in what we want to do, we've got to lay it on the table that we want it because it is a team effort essentially.
Thanks, Carmen. I had one other question. When you're doing sort of longer term calculations or making longer term decisions, what prices are you using? Because this year, especially with the livestock game, our prices are historically high. Would you be using those prices, or would you be sort of averaging out?
Look, it depends on who you're talking to. If I want the bank to lend me some more money, I'm not going to go too hard on prices or my yield expectations. So that's, that serves that purpose. If you're looking at long-term, more realistic planning that you want to do internally, you might want to essentially wind it back a little bit. But if you're doing sort of long-term year in year, if you're doing your budget for the next 12 months, I think you can, with reasonable security, forecast prices higher than average. If you're doing longer term budgets, you're going to have to potentially reduce that. The question that I'm facing at the moment, this is my own personal struggle, is that the input costs. And it becomes the third variable that none of us have really had to worry about too much before. So if you're doing a predominantly livestock business, your input cost of replacement stock is essentially much the same as your sales price. There's that really nice, neat relationship there. But there's not necessarily that nice, neat relationship between fertilizer prices and grain prices that we can really predict with any great reliability. So, because I can't predict it, I am just looking at today's prices, reducing everything by about 30% on both sides, and then hoping to communicate to our lenders that long-term, this business is going to be successful and we're going to maintain our margins. Because if you present a budget to anybody with the current situation that we're in as a long-term outcome, I think you really have trouble convincing, one, yourself, two, your business partners, and three, your lenders, whether these businesses are, going to be viable. And we can't predict anything. So I think, you, as much as you have to plan things 10 years in advance and do all of that, some things we need to work on, as they come to us. Who could have predicted the situation that we're going through at the moment? Now, if anyone, Andrew might want to throw in here or with some comments about what you're doing with your clients, but it's certainly a tricky one.
Andrew, did you want to comment there? Sort of putting you on the spot.
Oh, look, nothing much more to add than what Carmen said there, but I think you've got to have some idea of where your costs are and a budget to know whether they're varying. If you're not documenting them, not looking at them, you've got very limited scope to be able to have a communication piece to the important people in and around your business of how they've changed.
Yeah, I think I don't ever get too hung up on overhead costs. You do your best every year to reduce them in terms of, electricity, insurance, all of those sorts of things. Most of the variable costs, most of the time, are fairly consistent. So you just, but you've got to really look at that whole variable cost income piece all the time. And that's when you really need to be talking to a professional and saying, okay, well, am I optimizing the production system? And if you're spending a lot of time worrying too much about, whether there's going to be a 2% or a 3% or a 5% increase in your insurance bill, and you're not getting really solid on maximizing the financial outcomes from your production systems, then you're probably missing the point a little bit.
Yeah, agreed. I had a conversation today with a livestock producer in Central West New South Wales, and we picked out one aspect of their sheep enterprise. Look at lamb survival from scanning through to marking, and if your industry average runs at somewhere just a little bit north of, in merinos, of 60%, but there's commercial producers out there that are achieving 90% and greater. Yep. There's very, very few things in production systems that I can identify where there's so much scope for improvement, but it does show the really high potential reward in that particular system of getting things right. So it's about you're planning for lambing in terms of nutrition and shelter and privacy and things that some of those things don't cost a lot, but they revolve a lot around planning. Now, maybe there's not quite so dramatic gains that I could easily grab an example with cropping, but nevertheless, there are things there in terms of how you can have the same level of expenditure but have vastly different outcome in cropping systems, and it's around the timing. So we've got to look at those, put our energies into those things which are really high yield.
Well, thanks, Andrew, for providing that insight, and thank you, Carmen, for your talk today. And we may have some more chances for questions. So if people want to put those into either the chat or onto Slido. Next, I'd like to introduce Ben. Ben, would you like to share your screen?
Yep, let's make sure I can do that well. Yep. And there we go. How's that go?
Yep, that looks good. Take it away, Ben. Thank you.
Wonderful. Okay. Yeah. Hi, everyone. Sorry, I'll probably have to keep it moving a bit. I've got cotton pickers running and the like, and Dad's taken over for me for a little bit, and hopefully he's not having too many problems. It's been one of those testing days that I'm sure all sheep producers would have that feeling at times, the frustration. Just the pity I can't take my frustrations out and put a cotton picker in the freezer. So cool. So I've been asked here to talk about how I make financial decisions with my business. And just like to stress, I'm not an expert, but I find it interesting listening to other people's stories, and I learn a few things. So I'll tell mine, and hopefully you learn something that might be useful. I guess a big focus for me, one of my touchstones I keep coming back to is recreational farming. I like farming, but I don't want to be doing it for free, and I certainly don't want to be paying for the privilege. It's, we're in it to make money and to provide for ourselves and our future. So I decided to focus on 3 areas that are important to me. First is our succession planning and my family story. Second is I'll share some of the day-to-day tools that I use and find very helpful. And third, I'll talk just briefly about the team that I surround myself with. And I'll focus on my accountant given today's theme of financial decision making. So a bit about me. So I'm a 3rd generation Australian, born in Griffith. My parents were born in Australia, but my grandparents were essentially economic refugees coming from Italy after the war. So grew up in Griffith, farming family. I was what I'd regard myself as a bit of an inside cat. Wasn't terribly, I'd help out on the farm, but I wasn't terribly passionate about it. I was more of a bookish kid, terrible at sports. But I did have an interest in ag that I sort of discovered at high school and pursued through to university. I went to the University of New England and did a Bachelor of Rural Science up there. And from there, I rolled on to a job with the Department of Agriculture in Canberra. And I had a blast. I had a whole heap of things I was doing outside of work that was great. Got into sports. I was in the Army Reserve for many years and traveling. And in work with the department, I was there for about 10 years. I really enjoyed it. I did a lot of interesting different things. One stage I was traveling with the minister and supervising a lot of staff and working my way up in the middle management. And I finished off with a secondment with the Department of Prime Minister and Cabinet and, met and married my wife. Everything was going great. I was achieving, I was well respected, I was loved. Everything was going great, but I was started to feel miserable. You see, government, I found was a great place to spend time while you figured out what to do with your life. And when I looked at the next steps up the chain, I thought, well, I should be moving into, senior executive service in a few years. But I saw what they had to basically put up with, and how they lived their lives. And, it wasn't a bad thing, but I thought, that doesn't appeal to me. So I thought, it got me pretty down at the time. So I did probably what we encourage people to do. I got some help. So I found a counsellor, and his name was Dazza, and Dazza was great. He said, firstly, mate, you're not depressed, you're just not a public servant. So he says, I want you out of Canberra in 18 months. We've got to find you something else to do. I was looking at different options, and one I didn't really think about was, coming home. I always had ruled out farming in my head because, I always had this thing that you had to be super passionate about farming and, just dream of tractors and working stock and the like, and, kind of didn't. So anyway, Dad was, the opportunity came up. I had my long service leave. Dad was due for a hip replacement. So I thought, what's the harm in coming home for 12 months and, helping him out. And, really, I just thought that at the end of the 12 months, I'd say to Mum and Dad, this has been great, but it's not for me. You guys can, plan, the future without sort of thinking, is Ben coming home or not? And, holding on, you can plan winding down with dignity is probably the way I was thinking of it at the time. But I unexpectedly felt really at home. I thought, my God, it's something that was always there. I just had not realized it. I guess Mum wasn't surprised. She said later that farm boys are like salmon, they come home to breed. And I guess I was, just married, and I was probably at that point. And as fate would have it, the farm up the road from my parents' place came up for sale, and we had a go at it, and had the big auction day, and were successful. And it's amazing how your life can do a complete pivot from someone who's in a suit and tie every day, working in an office, a white collar job, to being farming. So I've kind of landed on my feet. So we're based in Griffith. I've got about 300 hectares of irrigated cropping. So cotton's my main crop, but I've also do wheat, and I've got some sunflowers at the moment. I work with Dad. He's got about 600 hectares extra, and we essentially work in together on a business. But as you could imagine, at the time when all this was happening, we had some big calls to make. So I found, we had to decide what was our plan. And, it's well and good to have a 10-year plan, but really I needed a 50-year plan, because I needed something to work towards, because I needed to figure out what am I getting myself into, and I don't want to sort of be down the track and find out what on earth have I got myself into. So a succession plan was required, and I knew too well, this is everybody probably on this webinar knows that there's a lot of examples of succession plans either failing to be put into place or being poorly designed and failing to do the job. I find that they've got to strike the balance between fairness and equity. You want to be fair to all the siblings involved, but at the same time you want to be equitable with all the siblings involved. Like everyone is entitled to part of the business, but you also want to be fair with the person who might have stayed behind, worked the farm, not pursued other careers, and not to have everyone rock home at the time the estate's being split up and put their hand up, and after 20 years working in the business for crap wages, find you've really walked away with not much. So I'm super fortunate that my parents were proactive about succession. I stress that it's their plan, but they've been great in consulting with me and my two sisters to make sure that we're involved with it, because it does have a big bearing on the decisions we make in our life. My parents also did it with good advice from their accountant and their solicitor as well. So just a quick outline of the concept of it. My grandparents were very generous and helpful with my parents. They helped them set up on their farming, back in the 70s when farms were worth $100,000. So my parents wanted to pay it forward and help us too. My dad, I think, said that he's never seen a hearse with a trailer on the back of it. So my sisters and I helped as we need it, when we need it, as my parents are able to. In my case, my parents helped me into this farm that we bought at auction. We put the farm in my name, and just for transparency and, to keep it, how do I say, to keep it proper, I guess. We also took a mortgage on that farm for 2/3 of it, my sister's 2/3, back to my parents, just so it was transparent. I guess another person would, have the farm in their name, turn around, sell it and take the lot. So that wasn't going to happen, but it's just good to put these things in place so everybody knows what's going on. The plan is for me to with time build my equity in my own farm, and through payments back to my parents, but also as my parents help my sisters, that builds my equity in the farm. And my aim, in the next 20, 30 years, or, when the event happens, is to be in a position where I can, with equity across all the businesses, such that I've got the option perhaps of finding the finance to buy out the rest. It may not happen, but we're going to give it our best shot. And if it doesn't happen, well, I've got other options. And, having worked off farm for part of my career, I'm very relaxed about finding work off farm. Some people tell me that some farmers, if they retire, they're like, what am I going to do? But I'd be very surprised if any farmer has a problem, finding anything to do. They often underrate their skills and experience. So I guess the expectation is that I help make it possible for my parents to continue farming for longer as they age. I'll be taking on, more of the load. I take a lot of the admin on at the moment. Anything that seems to have a computer in it, I'm the one called to fix it, but also I'm helping a lot with, decision making and marketing, and and down the track I'll be taking more and more of the load on. So and in the meantime, it grows the pie, the whole estate bigger for everybody. So it's a real win-win-win. So I guess the important point that I want to make with my little story there is that I have a pathway that gives me the confidence to invest my life in my business for the long term. It's I don't look at it year to year and profit and losses and enterprise budgets and say, oh, my return on investment's 3%, or maybe I should divest and move to something else where I might earn 6%. It sort of puts in perspective all the ups and downs and the journey that we're on. So another way I look at it too is that the assets are appreciating in value, particularly in the last couple of years. They've been great. They're not always great. But I look at the farm business, provided that's profitable and it keeps the wheels turning and the gate open, it's not bad. But I do appreciate the real wealth that I'm generating is within the asset, the land and also the water entitlements that I've got. Cool. So I'll roll on to tools that I find helpful. One of the first ones is, back a step. I have a combination of skills that I've probably picked up a fair few off farm, but I, put a high importance upon, developing your own skills, a bit of planning and putting in place good systems that help us as farm managers organise and make informed decisions. One of my first ones is the Personal Efficiency Program by a person called Kerry Gleeson. I did the course itself when I was in the government. Yay, they paid for it. But I found it was, very, very good. How do I say? As professionals, we're expected to know a lot of stuff about how to work, but no one actually teaches us. So Kerry runs through, simple things like how to basically clear your inbox for your emails, like how to sort of book jobs in with yourself so they get done, how to sort of manage a to-do list, how to set up your office, like the things that we don't sort of put a lot of stock into, but they create a lot of friction. Like not doing these things puts a lot of friction and a lot of, load on you that's just not necessary. And I found that great bringing it home. There is an audio book about it. So I'll mention Audible a bit later, but really encourage you to get onto it. It's, sometimes it's a tad boring, but work through it. And I hope you pick up some things that are useful from it. Farm maps, I find having a good farm map is fantastic. Ours went through a bit of an evolution. I'm just trying to find it where to share it. Can't actually find it. So just give me a moment. I'll see whether I can open it. Yeah, I can't find it. Carl, I don't know with your calling in. Is there any way I can minimize? Let's see. Show Windows, got it. I think, yep, here we go. Beauty. So, yep, this is hidden. So that was the farm map that I had when I arrived on the place. We sketched it up just from the brochure that from the selling agent. So, pretty rudimentary to what I have today, which is this. You'll notice the Elders logo on there. It's something that my agronomist organised. He used to be with Elders, so they, I guess, do some more work together. But essentially, things I find important. Can you see my pointer moving around? Yep, good. Thank you, Mary. Yep. I put my business details on there. I've got lots of white space because I've got multiple copies of this printed out. I doing a farm, my next cropping season, I'll say, okay, I've got, these paddocks are all planted to cotton. I'll list it out. And from there, I can start planning forward. Okay, if I've got 70 hectares of cotton, I'll need so much, kilos of fertilizer or inputs or et cetera. So it's kind of like the basis for my farm planning. But I just find other things useful, like just having hectare sizes, the bays split into small sizes. So when I'm spraying and I know that I've run out, I've got 2 more bays to go. So that's another 10 hectares. I just need another 1,000 litres. But I can print this off and highlight maps and take photos, screenshots, and send it off to people to, help find their way. So even putting the power lines into the area or contractors has been helpful too. So it's evolved a long way to come to this point. But I've heard some people don't have farm maps, and I don't know how that happens or how it's. But I really encourage you to get one because I use it a lot, and I don't know how I'd do without it. Next thing that I really use a lot, day-to-day tool, is Excel. I've been trained well on it coming from, I guess, uni. We used it a lot because I didn't science degree. You seem to live in Excel and in the government. But if you're not familiar with Excel, do the best to teach yourself. And the best way to teach is by doing. And then there's always YouTube. And if there's the opportunity to put yourself on a course, have a crack at it because it's very, very powerful. So I have a couple of key tools that I like using, some more often than others. The first one is my cash flow. So I've taken the template that when I was applying for finance, the bank said, oh, we'll need cash flows, current and forecast for the next 2 years. So I said, cool, no problem. Do you have any templates that you find more useful at your bank? So they sent me one, and I've just improved it over time, also with the help of my accountant. I'm happy to share this template and the other templates that I show you with the participants. So I don't know if you I can give my details out at the end, but if you need to, just contact by Callum. So coming back to the cash flow, I'll just explain it in brief. This table at the top just shows like a running of how you're tracking. You whack on the 1st of July, whatever's in your bank account here. And then as you populate all these squares for income, or cells, I should say, and expenditure, it all pre-populates. So how I populate this is from my financial software. So I've got Mile, but I'm switching to Xero. And hopefully I can automate a lot of this, but I do manually type them in. I print off a report and just type them in. I keep all my accounts the same, my types of expenditure, so it makes it pretty straightforward. So I type in all my actuals over time, and then I'll copy paste that into next year and use that for my forecast. Of course, I'll look at each one and think about, well, urea's gone up, or I've got so many hectares of cotton, I'll need to up that or down that, and then I sort of see where I land in terms of my total expenses, my profit before tax, and then I'll put in all my other costs. So living, principal reductions, because the banks like to see that one, that you're trying to at least pay off your debt. Other types of expenditure, plant and equipment, super. I really encourage people to put money into their super as much as possible, or much that makes sense, because it's it's handy down the track to have something that's off farm. And unless someone corrects me if I'm wrong, I understand there's some measure of protection from bankruptcy. So most people say, oh, my farm is my super, or my business is my super. Well, if it's not there anymore, what are you going to rely upon? And I know farmers aren't great with super, but do it, get it organized, as much as you can. And FMDs, farm management deposits, we in agriculture love them. So you see the magic number down the bottom and you think, oh, that's a loss, or it's a positive. So you can just start working with that to see where could I save money and what could I do differently. What I find really useful to do with mine is I highlight where I've got I put a color shading, what's a forecast, what's not, for other people seeing it. And I basically just have these cells here to give me an estimated income from my crops. So if you can see here, it's just a simple formula. So many hectares, so many expected yield, and I'm conservative for my yields at $70 per unit. And I'm also conservative with that too. So I give myself a lot of fudge factor, and because some years things don't go to plan, and you at least make your budgeted target, it may not be over. And if you do, well, then that's a good problem to work out with your accountant. So that's one of my tools, just keeping a track of time. Next one is my contracts tracker, if I can find that. Yep. So this is something I whipped up because Mum, hope she'll forgive me saying this, didn't have a great system. It was all handwritten on a piece of paper just whenever she took a contract out to forward sell cotton, or when Dad did. So Dad would say, hey, I sold some cotton today. And she'd say, oh, great, how many bales, how much? And she'd just write that down. And, inevitably the piece of paper gets lost, or, yes, you'd have contracts emailed to you, but they get lost too. And I just thought, well, I really want to be on top of this. So this is my latest and greatest version. If you look back across all my years, which I haven't put in, like, it's very simple and gets more and more sophisticated. But this could be useful for forward selling any commodity, probably not so much for livestock, but for cropping. This gives you the ability to put in the date, the contract number, who's buying it, when it's delivered, how many units. These are things that are important with cotton, your bale sequence, the price you sold it for, the return you're expecting, P&D's profits and premiums and discounts. And then I've linked it all back to give me an idea of how much I've sold. So, with these dummy numbers I've put in, I can see that I've sold 7 bales to the hectare already. I'm budgeting on 10. I'm thinking, oh, am I, how hard, how aggressive do I want to be with this? And yeah, so it's a good way of seeing it. And for example, I've got my 9 bales forecast, 10 bales, and it tells me, I'm 70% sold, but if I got 9 bales, I've got 78%. Or if I do a bit better, I haven't sold as much. So it's just good to look at a glance and to have a tool like this, because your broker might call you up and say, actually, even the other way around, my broker knows, because I share this with him, where I'm at, and he's got his own system too. But I tell him, like, I'm comfortable with selling up to so many bales a hectare by an important critical point in the crop, like for example, after flowering and bolls are set, cool, I'll take it to 60% without too much worry. But I won't be selling anything more than 20% prior to planting, just in case something goes wrong, and something always does go wrong. So that's another tool. And my third Excel tool is my fertilizer analysis. So it's something else I made up because I was trying to compare for phosphorus fertilizers, single super, MAP, soft rock phosphate was an option put to me, and cow manure. So I found it super confusing trying to juggle it up. So I just made a tool to help me, simplify it all. So, each product's got a different percentage of P and a different cost. So each, you've got you're paying for different amounts for each kilogram of P. So you whack it all in, and then, it'll tell you what your bill will be if you want to buy so many kilos or tons of each unit. And from there, I like to think about, okay, well, you can mine phosphorus from your soil. So if I say, what would my standard program be, especially if I want to build phosphorus? So that's what I'm happy to afford to put in on a standard year. That gives me 128 units. I know my cropping rotation standard would remove about 60 kilograms of phosphorus a year. So with this program, I'm building 2 rotations worth of phosphorus every year. If I want to go a low-cost program, I can manipulate the numbers and see, like, for example, this one, I've got half a crops rotation. But if you build up a bit of a bank, well, then when times are tough or tight or supplies are limited or expensive, like now, I'm happy to cut back on my phosphorus. So that's just another tool I've made. Cool. So coming up to other tools, because I applied for a farm innovation fund, I had to do a risk management table, but I actually found it quite useful to reverse engineer it for a storage dam that I built on my place, as you probably noticed on the map. So I thought about the things that keep me up at night and basically threaten my business, and I write them down, and I think, well, what can I proactively do about it to help mitigate the risks? And one of the things is for us being irrigators is the storage dam or some form of storage. It has multiple benefits, and I'm not really here to sell you all on them, but the key ones are flood mitigation. So cotton likes to drink, but it doesn't like to drown like we do. So if there's heavy rainfall and my crops are going under, I've got somewhere to pump water to and get it off my crop as quickly as possible. Can save you big bucks. Another one is drought mitigation. It won't protect me from a drought because it won't water that much crop, but it will help extend my my existing water bucket just a bit longer. So it's helpful in that respect. My farm's not really big enough to capture that much rainfall runoff to fill it. So you've got to be quite lucky or unlucky to have a flood to sort of put significant water in it. But if I've got cheap water on the market, and I can buy that and fill it up. So there's ways I can use it to my advantage. And also it just helps with supply and demand fluctuations. Like if it's coming up the hot period and everyone's watering, I can order water early, put it in my dam, or use my dam to supplement my own water to get across my crops quicker. So it's kind of like an irrigator's thing of getting water on the crop when you need it, especially before a heat wave, and not being caught without being able to get the flow rate you need. The tool itself. So I went through and filled it out. Just whacked down each of my, risks that I thought could happen. And then I just wrote down, okay, well, what can I do about it? So it's, I like to say that plans are quite useless. Like you write plans and they usually get saved onto your computer or shelved or submitted with whatever you're doing. But planning is essential. So actually going through this and thinking about it as you're filling out is actually where the value comes from a lot of these things. Sometimes you don't even rely upon the final product. So even doing this is part of the application. And I basically went online and pulled different types of business plans around the place to sort of put them together to make one that suited me. Really, helped demonstrate that, yes, I've thought this through problem, and I'm not building a $500,000 storage dam. Today it would be worth about $700,000 with the cost of everything. Not doing it on a whim, and I'm not making a white elephant. And it's been great. So some of these things can really help support the decisions you make. And also further down with this, like you've got different types of risk, but something that's also useful is like a SWOT analysis, which is your strengths, weaknesses, threats and opportunities. It's sometimes, the old saying, when you got lemons, make lemonade. Sometimes you think that, actually this is quite a weakness, but there might be a way of turning it to an advantage. One thing I did like that was during a drought when I didn't have much water, I wasn't cropping. I found that plenty of trucks were available, and the cow manure was quite cheap, and people were, freight was quite cheap. So I basically stocked up on, lime and cow manures and all the rest of it. So it's sort of covered for periods like now, when you can't find trucking for love or money. Cool. So I'll just come back to the PowerPoint. Yep. Can everyone see that? Yep. The PowerPoint slide, maybe have to go back to sharing it. Cool. Okay. So the last one is Audible and podcasts. I like to, I like just reading, but I don't have time as a farmer to sit down and read. But I do spend a lot of time in machinery. So I always carry in my pocket, like you probably can't see that, the old earphones. I can stick one in one ear and listen to the tractor and the tractor engine and the two-way with the other. And I just burn through a whole heap of podcasts and Audible books. And I just, I can give out my recommended read list if people really want it. I won't bore it with you now. But one tip I could offer with that is that learnt from a friend of mine previously, is read one book for your brain and then one book for fun. So, it sort of helps keep you disciplined to read something that's sort of like a personal development or professional development or something like that, which, if you didn't sort of have that sort of system, you probably wouldn't have read it in the first place. And then often you go, oh, I'm glad I heard that. I have found things out of that were really useful. And and I've just found that's a really good system. Last things that I find useful is probably the standard thing that everybody else does, like the to-do list app on your phone, weather apps. I use Apple Notes or the notes function on my iPhone. I've got lots and lots of checklists and what I call recall sheets or aid memoirs. I used to call them in the army. For example, I'll list all the information about each tractor that I just want as a memory jogger, like filter numbers. When you're at the shop and you go, I've got to do a diesel oil change, but I can't remember the filter numbers. I open my phone. Or common problems with the picker, and it's a big file, that one. So, I've even got checklists for like before big rain checklist where I go, right, make sure the pump's fueled, make sure all the relevant doors and gates are open or shut, clean the gutters, so I find all those things just, really helpful towards either taking the load off so I can make better decisions or helping me make the decisions themselves. So last one is my team. It's my dog Jip. He's good value. But I read somewhere lately that, they predicted that farmers would need, because they're jack of all trades, they'll need fewer and fewer people. Like they'll be doing more and more themselves because they'll be using technology. Rather, it's gone the other way where we're involving more and more people. So my father and I, we run quite lean. We've got 3 farms and we've got 3 people full time. Myself, my dad, and Reno. Dad and Reno are both 70, so I'm the shit kicker. But it works quite well, except when we're really, really busy, when we need an extra half a person. But other times of the year, we don't really have work for that person. So we try and make the difference. Well, in the past with backpackers and the like. So and otherwise we muck in and do it ourselves. So I'm a big believer of buying my brains when it comes to people to help me. And I also like to think about what I can automate or what I can delegate. It's, for example, one thing I'm thinking of down the track is automating my irrigation. I still can't see how it's going to work, but if I've got that happening, I could be driving a tractor and I don't have to interrupt my work to go and change the water, or I could get a full night's sleep, which would be amazing while we're irrigating. Because irrigating is just like having a baby. You're up and down several times a night to drive down the farm and change something and drive back and try and get to sleep again. So some example, I should say as well, when you've got people and hiring services, that it's important to remember the buck stops with the person writing the checks. So while you're getting advice, you can't avoid being the decision maker. So, don't make excuses if things go wrong. You've got to just, I find it's helpful for my, attitude just to take, ownership of it all. But you need to take that advice and listen to it to make your own decision. So in saying that, I am quite forward in asking for advice, like the accountant or the bank manager, like, is there anything that you would recommend that someone like me would do in my position? Or if you're in my position, what things would you be considering? And it's amazing sometimes the questions you get, because we all like to think that we're on top of our game, but sometimes we've got big blind spots that we wouldn't have realized. And sometimes just asking for an outsider's perspective, particularly one that gets to know your business over time, it does make a big difference. And so some example of people that are key to me, excluding the obvious, such as my partner Lou and dad and employees and my mates, machinery technicians, yes, they're expensive, sometimes hard to get, but I'm no time soon going to learn how to overhaul an engine. So I'm quite happy to pay for that service rather than try and spend 2 weeks in the shed trying to fix something when someone else that knows what they're doing can do it in a fifth of the time. My independent agronomist, and I stress independent, my agronomist has his own company, Summit Ag, is Heath McWhirter. Why I stress it's important to have an independent agronomist, or why it's important particularly for me, is because I like getting advice that is not clouded by, is this person trying to sell me something, like sell me a product? And it's good. Heath's great. I'm starting to hit him with a lot of questions and ideas of, going down the regenerative path. I just think it makes a lot of things, if can be applied to my business, just make good business sense, without all the warm and fuzzy, of helping, improve soil carbon for improving climate change, or helping with climate change. those things are important to me, but also important is not handling really dangerous pesticides, which I sometimes have to do, and I really, really detest doing. So if I can cut them out, we'd all be happier. So then next person is my principal financier, so my bank manager. I proactively manage that relationship. If I'm thinking about doing something big, I talk to them. I run it by them. I give them a heads up. Look, I'm thinking about doing X. You'll be seeing an application at some point. For example, at one point I thought, well, the threat to my business is low allocations. Is there ways I can get non-allocation dependent income, or have a crop or a commodity that just can afford to buy water regardless of the cost? So, and one of those is almonds. So I investigated it and crunched the numbers and had a chat to my bank about it, and gave myself two questions really, like, can I grow them? And then should I grow them? So I got the relevant people in that do it, and even a consultant in who helps people set up their farms. They're like, get into it. This is great. You've got great soil, and oh, you've got this and that, and you've got a storage dam, and oh, brilliant, go for it. And then I work through, okay, well, what are the risks? And it's big money up front, and if it falls over, it'd sink my business and probably that of my parents. So I put it on the shelf. That's a lovely idea and all the rest of it, but maybe a good idea for another time. Maybe I'll regret that in future, but it's there's some risks you just can't afford to take. And so I come to talking about my accountant. Actually, how are we going for time? So my accountant, I use Boyce, and our process is we have a tax review in April. We look at our position statement, so all the things on the balance sheet that we own and compared to the liabilities, and that's really useful. We have one for the tax man and then one for myself and the bank manager. Just shows our level of equity, and I find that's probably the key financial document I use for just tracking my performance. I don't really look at return on investments. I just look at, like, am I going ahead, or am I losing, or am I risking going backwards? But so far so good. The next meeting we have is tax planning in May, June, where we look at those cash flow budgets I showed you, the actuals, and I forecast the next couple of months. And then we talk about options. So if we've got a large revenue, and usually with cotton, it all lands about that June, July sort of time. So we're sort of thinking, well, do we postpone ginning or not? It's just managing things so you pay an appropriate amount of tax. And I do believe in paying tax. Someone's got to pay for the roads and the police force when and all those different things that are important with our country. But I just don't want to pay too much tax because it doesn't make, good business sense as well. So, and the accountants are brilliant at pointing out things. We're just talking through your options. We work together on our business activity statements and use our accounting software together. So backwards and forwards with that as we need to. When I was building the storage dam, I did the application, I ran it by them, even though it probably cost another couple $100, but they came back with better suggestions too to make the application stronger. And one hot tip they gave me, which was brilliant, it's the gift that keeps giving, is when we bought the farm, we got a depreciation report done. And that gets essentially an assessor in. They go around, add up all the fences and sheds and house and concrete water stops, and they they give you a report, and then you use that every year to it starts with a big amount and it goes down every year, but it's a big lump of money that you can big tax deduction. I don't know how it works, I don't understand it, but I love it. So in conclusion, that's some of the things I've learned along the way and some of the tools I've developed. I'm happy to share my templates and experience. If people really want to ask me more about it, I'm happy for my number to be passed around, and give me a phone call. If I'm free, I'll try and take it. And we'll go from there. Cal, back to you. Hope I haven't bored everyone to death.
No, I don't think so, Ben. Thanks for that.
Sorry, questions, but you can ask if there's questions.
Does anyone have any questions? We've got Hannah and Leon saying thanks, Ben. But if we do have any questions, if people just want to put it in the chat, and we might give that to you, Ben, and get you to answer back, because we are running a bit low on time.
Saying that too, I found this one too. I love it. Like my dad's been messaging me saying, "Oh, I thought you were going to be done about 7." So, yeah, I'm happy to answer a few questions, but I just probably can't hang around too long.
Yeah, no worries. Well, thanks, Ben. Ben, do you want to stop sharing your screen?
Yeah, how do I do that? Share. No, stop that. More.
There's a comment that there's been some good quotes in there, Ben. So
yeah,
that's great.
Oh, cool. Is that fine now?
That's great.
Cool.
Thank you. So what I might do now is I'll share my screen.
Sorry, I just saw your message too, Cal. Sorry.
No worries. So if we could get everyone just to stick around for a couple more minutes, we'll try and just do a little bit more with Slido. So I'm just going to ask a couple of questions. So what activities would help you prepare for drought? So what things could we do from an extension point of view, or could government be doing to help you prepare for drought? So if you want to throw in a few answers there. So things like this will help us to improve these events and give us some ideas for future webinars. So better water security, increased storage options, fodder storage. Drought planning, infrastructure improvement, preventing soil erosion, that's a great one. Pipe and capping. Very good. So there's some great pieces of knowledge there that'll really help us. So the next question I want to ask you is, what are you going to be doing in the next 3 days as a result of this webinar? So has this webinar had an impact that's made you drastically want to change things? Is there something little that you're going to do in the next 3 days? And the reason we ask these sort of questions is we find it gets people to think while they're on the webinar, at the event, about things that they might like to change, and you're probably a bit more likely to do it. So checking zero, updating cash flow budgets, looking at resources, they're great things to do in the next couple of days. So a few people will be looking at Excel, I reckon. Someone wants to get hold of Ben's template. I think that's a good idea too. Prioritising tax planning. So while you're still writing those in, an Excel course, I think that's a great idea. I know a couple of the LLSs were running Excel courses online. Might be worth looking into. What I'll do is give a bit of a plug for our next event. So it'll be on the 25th of May. We'll be doing a webinar on making good fertiliser decisions. And then over the next 3 or 4 weeks, we'll be running another webinar on grain storage, and then a field day looking at investing in wire and water, and that'll be out in Western New South Wales. And we'll be doing another workshop in the New England looking at sowing pastures. So keep an eye out on your New South Wales Farmers email and wherever you found the information for this event, we'll be shooting an invite out for these next events very shortly. So what we'll finish up with just some monitoring and evaluation. So we hope you all found today's event interesting and that you've identified something you can implement on your own farm. But what we'd like you to do is jump onto Slido, and no one will be able to see these survey questions, and just fill in the survey, and that'll give us feedback that I guess shows us what we've done well and what we may need to do better in the future. And it also helps us go back to our funding organisations and show them that what we're doing is worthwhile. So yeah, this would be really good for the Farm Business Resilience Program if you could fill these in. And if you're watching this online, you'll still be able to fill out this survey, hopefully. So yeah, if you could jump on, that would be great. So that's it from me. Thank you everyone for your attendance. I know we've run a little bit longer on time than we had planned, but I think it was well and truly worth it. So yeah, thanks, and we'll see you at the next event.